Tonight we're talking to industry veteran Mike Brown. Now there are a handful of industry veterans who have seen the market change over time and have some lessons to impart with us. So Mike, we're looking forward to chatting to you. Thank you so much for joining us. Let's go back to your days at the Chamber of Mines, of course starting there as an economist. You started out there in 1973. You are a Joburg boy, born and bred it seems, looking at where you studied and spent of course your years at Witwatersrand, University of Witwatersrand. But let's go back to those days because you started off as an economist. Tell us about some of your time there.
Well, the Chamber of Mines was a big sort of private sector research organisation, and the gold mining industry was massive in those days. You know, there was 1,000 tonnes of gold was produced a year, not 200 tonnes which we now produce. So we had a big economics department, and what happened was as the government was trying to develop the financial markets in South Africa, they set up the De Kock Commission of Inquiry into Monetary Policy. And in those days, if you bought foreign exchange, you had to buy it from the South African Reserve Bank. So all the farming foreign exchange and all the gold mining foreign exchange, everything went through the Reserve Bank. So we said to the Reserve Bank, we think you should be selling some of the foreign exchange, allow the Chamber of Mines to sell its own foreign exchange. And they agreed to that even before the commission finished. And they then got hold of us and said, when can you start? And the Chamber of Mines president happened to be at the meeting. He said, well, next month. So we had 2 weeks to set up a foreign exchange department from scratch. And then they said to me, well, you're the guy who can do this. So I then started selling, and that helped develop the foreign exchange market in South Africa, to have the private sector actually selling its own exchange to all the banks. And then we found the Chamber had all sorts of money all over the place. It ran its own insurance companies and its own savings banks and all sorts of things. So we then started running the whole investment operations of the Chamber as an economist, as part of the economics department. And that got me into the investment markets, and I then moved into stockbroking from that. A
little bit more exciting than looking at supply-demand curves and all of those things. I suppose economists would have something to say to me right now. But why did you move into? Why did you make that leap?
I think I just wanted to move along. You know, the Chamber was, if you worked there for 50 years, you might end up being the managing director of the Chamber of Mines, and I was 30, and I was already running 2 departments. I thought, well, let's go out and do something else, and let's earn more money, because we were civil servants really. So then I went into stockbroking, and the doyen of the stockbroking business in those days was Davis Borkum Hare, run by Max Borkum and Henry Hare, and they really ran a stockbroking business, which was an old-fashioned stockbroking business that everybody dealt with Max. Max really ran the whole business. If you were doing an issue or a corporate raising of funds, or you were going to list a company, if you didn't go through Max, you weren't going to be successful. And so that was a great company to go to. And what I found when I got there is I didn't do any research. They just lived on their relationships. And so I said, well, I'm an economist, so let me start doing some economic research for you guys. And so we then set up a research operation in Davis Borkum, and which became quite famous because it was quite innovative, and we sort of did reports. I was the first guy who often went to people and said, let me come and do a presentation. They said, what do you mean? I said, well, let's talk about the economy, and here's some slides and stuff like that. And nobody had done that before that. So
you were still bringing in your economic background in those days.
I was the economist, but then we started doing mining reports, and we did some massive reports. We did something, for instance, the diamond industry. And in those days, De Beers was the only share that really mattered in the JSE. And we did a whole book on the diamond business worldwide, and we hired guys to look at the diamond business, and De Beers had a diamond mine which they hadn't told anybody about, and we went up there and we took a photograph of this thing from a helicopter, and we said, well, this is the new De Beers mine. We put on the cover of this report, and of course De Beers went berserk. I mean, they got hold of Max and said, no more business ever. And I said to Max, don't worry, we do lots of business from buying and selling De Beers shares, which happened. Of course, the Anglos forgave Max after a while, and so everything moved along. So we were very innovative in research at Davis Borkum, and so I learned a lot there.
Tell me, Mike, I mean, Davis Borkum Hare and Company, so you walk in as an economist. How much of what you learned at the Chamber of Mines could you directly use in order to actually do economic modeling and, kind of building a methodology for this business? Because quite frankly, coming out of varsity, you know all the theory, but you don't actually know how to apply it. Did you learn a lot at the Chamber of Mines?
Yeah, the Chamber had a very practical economic, everything they didn't know what to do about, they put into the economics department. So I ended up running a team of about a dozen economists, and you talk to economists my age, they all worked at the Chamber of Mines at some stage or other. So we did everything. We did evidence to all the commissions of inquiry and stuff to Parliament, and we looked into all sorts of things in the industry, and we structured all the statistics in the industry and so on. So quite a lot of that was quite practical. But getting into stockbroking, where people sort of said, well, listen, what does this matter? Is the market going to go up or down? Where's the gold price going to go? And that sort of stuff. Well, I had good contacts, through my Chamber of Mines traveling, because we traveled the world selling Krugerrands and things like that. And so that helped a lot. But I learned a lot in the stockbroking industry because that was practical. The Chamber of Mines, we really were a research operation, a research department, a support organisation. Apart from the investment side, where all of a sudden we were running an investment department, and we were the biggest players in the market in many cases, so it was very useful for us to learn that.
Did you find the kind of movement from a Chamber of Mines into the stockbroking industry quite difficult for you to do at first? Or was this a kind of an easy transition for you to do?
I didn't think it was difficult. I enjoyed it. It was great, and I was getting paid a lot more money, and so it seemed reasonable to me, and it was enjoyable. And
it seems like money was a nice catalyst here for moving into.
Yeah, well, in those days, I mean, nobody had any money in those days. Me in particular, having worked at the Chamber for 10 years and so on. So that was But the big issue in stockbroking is you're your own person. You're not working in a big bureaucracy where everything goes through a whole series of committees before things can happen and so on. So I enjoyed that, and so I learned a lot at Davis Borkum. But even when I left Davis Borkum, I was there for about 6 or 7 years. They still hadn't really realised that research was an important component of their business, because they had the best trading. All the top traders worked for Davis Borkum, so they were a trading company. I used to say to Max and Henry, I said, listen, us guys in research are actually contributing a lot. And so eventually all the research guys left, including myself. And that year we left, Davis Borkum's business went down by 40%.
Okay.
They went about 40% because people just weren't allocating the business because they weren't getting the research that they'd got used to.
What did stockbrokers focus on in those days in terms of separating the business between, let's call it corporate finance kind of business where you're doing listings on the exchange, or M&A, merging and those kind of things, versus trading sort of private clients, in other words, institutional versus retail? What was that sort of split?
Well, the institutional business was fixed commissions. So, why would an institution deal with you rather than with somebody else? Because they were just going to pay the same commission and pay the same brokerage. The only reason they deal with you as a stockbroker is because you had the access to lots of shares. You had, because of your corporate deals, you could go and raise equity from different companies, or you had close relationships with companies. So people used to run corporate business in order to get access to equity, so that they could then deliver bulk, plenty of shares when people wanted them, because we were all earning the same commissions. And then research became quite important. People said, well, we'll give you more business because you're giving us research. You're telling us which shares to buy, which gold mines to buy.
So the commissions don't change, but the volume changes.
So the volume changed. So brokers became more and more just being trading orientated. They then started looking at research, and they then started looking at corporate deals just to get their hands on bulk, on volumes of business. And so Davis Borkum was a great place to be. When I left Davis Borkum, there was one other company that was really contesting with them, which was Frankel Pollock. And so you already had Frankel Pollock and Davis Borkum between them with almost 50% of the market. In those days, it was an open outcry on the floor. You didn't have trading through electronic trading. So, half your dealers on the floor, trading floor, were Frankels and half were Borkums, and they would deal with each other almost.
Sounds like bird species or something.
Yeah, so that's right. So it was a very different sort of business. But Frankels were very research orientated, which was nice. And but when I joined them, a couple of things went wrong. Firstly, they bought Max Pollock and Fremantle, which is the third biggest company. So now you had the biggest company and the third biggest company joining together. So now you had a massive broker doing about 30% of the business in the market. They say when you do more than 25% of the business in the stock market, you're actually trading with yourself half the time, because you had. So there was this massive company. But they had a trader called Greg Blank, who was front running with a lot of institutions. And of course, we found out about that, and we said to the JSC, we're not happy with what's going on. The JSC then, of course, brought in the police, and they arrested Greg Blank and all the rest. And the industry in those days, I don't think the stock market was run by the stockbrokers. So they saw this as the opportunity to get rid of Frankel Pollock, because all of a sudden here was this company that was front running and it was illegal and doing all that stuff. We in fact had been quite reasonable, go to the JSC and said we were worried about what was going on, and we couldn't see the trades because we could only see our side of the trade. You didn't have a PDA system in those days. You could see both sides of the trades. And Greg was in cahoots with other brokers from other companies, and they were doing the buying and selling, and the money, all the shares they were buying were going through the financial rand into the UK. They had another guy in cahoots with them in the UK, and they had a lot of institutions, and this was a major issue. The only guy who fell on that thing was Greg Blank, who confessed guilty charge, and he went to jail. Everybody else got off
The
scot-free.
risk department at Frankel Pollock that was.
Well, we probably had a risk department, but we picked it up too late. And it's, one assumed that your word was your bond. You didn't think the traders would be doing these sort of things. And so Frankel Pollock went from being the biggest broker to virtually nothing almost overnight. And it was a massive challenge. And most of the guys, funny enough, stayed there, including myself. I stayed there for the whole period. We said, let's rebuild this business.
Now, how much of the original Davis Borkham Hare research department actually moved over to Frankel Pollock at that stage?
Oh, there was a couple, but those days people moved quite a lot. They used to say, at the end of every year you get your bonus, and then all the brokers would get in a lift to go and have a couple of drinks. They get in the lift, and whatever floor they got out, that's the broker they'd work for the next year. So brokers changed, analysts changed a lot in those days.
Now, the decade that you spent there, you spent a decade with Frankel Pollocks. What is it? One thing that stands out, memorable. What is the one thing that stands out?
Well, the critical issue we did in Frankel's is that we said we had to be innovative. So what we did is we used to have this annual investment conference. In those days, South Africa was held in sanctions, so nobody came to South Africa, nobody dealt with South Africa. We'd bring out all these speakers from overseas, and these were serious people, like Eddie George, the governor of the Bank of England, Alan Walters, who was Maggie Thatcher's economic advisor, and we had people from Alan Greenspan's office in America and so on, and they'd come out, and for a week we'd just hold this conference and take these people around the country. And then we started having conferences at Sabi where we'd take government people along and say, listen, come and talk to the analysts and talk to the institutions about what's happening in the Reserve Bank and what's happening in governments. And then when the political negotiations started, when the ANC and the nationalists were negotiating about the country, we put together a series of meetings at Sabi. The first time Cyril Ramaphosa and Ralph Meyer met each other was at a Frankel Pollock session in the bush at Sabi with 200 institutional investors there. We took the whole camp and so on. So we were very innovative. So what we did is we said we can't compete in research. We thought we could compete in research, but people wouldn't give us the business. So let's be so innovative that they had to give us the business. And so innovation was a big thing. Innovation was a really big thing for us.
What do you miss most about those early days, and how it compares to the industry as it is now?
Well, you've got to be a young man to be in that business. Ask Kurvi, yeah. And I'm a bit of an old man, but so I enjoyed it. It was a great place to be. But eventually I moved out of that into investment banking. And investment banks, of course, do a lot more than just stockbroking. So that was a big learning curve.
And Gensec was the organization over there. And I see that you went through a whole bunch of departments before you actually started. And Gensec came back to you and said, listen, how about creating a trading business for us? And you kind of find yourself back in stockbroking, having spent all these years kind of trying to be in investment banking. How did that come about?
No, when I got out of stockbroking, I went to Gensec Bank. And by that stage, I was quite well known. So a lot of people said, come and, join our stockbroking business. I thought, no, I don't want to do that. I want to get into investment banking. And investment banking wasn't all that easy because, I didn't have any background there. But Gensec Bank they had the smartest guys in the market. Everybody who was really smart seemed to be working at Gensec Bank, but it was like herding cats. All these guys would go and do their own stuff. And so I went in there and said, right, I'll set up an operation where we'll try and market what Gensec Bank's doing and try and getting these guys pulled together. Things like CRM, client relationship management, you try to introduce that there, and it worked for a while, but not. So that's what I really did, and then I started identifying opportunities. And one I said, you don't have a stockbroking business, so let me start a stockbroking business for you. So I started.
Which you knew very well.
Well, I knew all about stockbroking, so that I was able to do. And there, I remember Max Borkham always saying, the first thing you do is you make sure your back office works in stockbroking. So when I started Gensec Trading, I went and got 2 or 3 of the top back office people I knew and said, right, come and work for me. And we had a fantastic execution broker. We didn't do any research. We just executed trades. We just said, come to us and we'll execute these trades. And we'd charge, in those days, you would charge about 50 basis points for brokerage. We charged 5 basis points or 10 basis points.
You had a discount broker model there.
So we were a discount broker. We were South Africa's first discount broker. So what I learned in stockbroking, I could take into Gensec Trading. But then we started doing all sorts of other things, like we did the first collateralized debt obligation fund in South Africa, something called Kawani, which was putting all sort of debt together and enhancing it with some cash. And these are the things that collapsed in America, brought down the American financial system.
Yes.
But we shut down Kawani a long time before that happened at Gensec Bank. And one of the things we got into was exchange traded funds.
Yeah. And as a matter of fact, on the back end of that, I'd like you to look at your screen right now, because I want to show you 2 visuals quickly. And then Mike is going to be talking to us about these visuals. You're looking at Jeff Rothschild, who's investor relations at the JSE, with the ex-CEO, Russell Loubser, and Mike you can see over there. And there's Russell and Mike standing with the proverbial blowing of the horn, or the award that you get when there's a specific listing. Mike, tell us a little bit about this.
Well, when we started, and I started Satrix purely because there was an article in The Economist saying that a big thing in America was something called the Spiders, which was the first exchange-traded fund in America that tracked the SP and DR 500 index in America, and they call it the Spiders. There was an article in this, about one column. So I went to one of the guys at Gensec Bank, and we had all these very clever guys, a chap called Adam Bunkel, and I said, see if we can do one of these in South Africa. And about 3 weeks later, Adam came along to me with a whole thing. And I said, how did you do that? And he said, well, there's something called the internet, which an old bloke like you doesn't realize. So I was able to download all the listing documents for this thing from the American Stock Exchange. And we've now restructured this thing to be a South African listing document. So we then went to the JSE and said, can we list this? JSE nearly had to fit because you can only list individual companies. You can't list a fund. But they said, no, this is quite a challenge. And another company called Corp Capital Bank, which was a small bank, they'd employed a guy who worked in Toronto. And the very first ETF, funny enough, was found in Toronto, and this guy had worked on that first ETF. So then the JSE said, well, let's get in cahoots with you, so we'll start a partnership. So we'll become a partner with Gensec Bank and Corp Capital Bank, and we'll develop the first exchange-traded fund, which was quite an innovative way of doing it, because you couldn't list it. It wasn't a company, so we actually listed Satrix as a futures contract, promised to deliver a basket of shares in the future, and we got away with doing that, and that picture there, I think, was one of the first lists when we first listed Satrix 40. It was the listing occasion of that particular product back in 2000.
Back in 2000,
Yeah.
and of course now Satrix, you moved on from those days. Satrix is now owned by Sanlam, and you went on to found ETFSA.co.za. Tell us about the business model. Tell us, because you're really appealing to the retail investor. You're trying to get ETF products to the retail investor right now. How successful have you been?
Well, ETFSA is an interesting business. First of all, I work for myself, which I found over the years that's the best person to work for is yourself. You don't have to report to anybody. And so I thought, well, globally, more and more investments are being sold online through websites. So ETFSA is probably the only purely website-based financial services business in South Africa, where you buy all the information you need on ETFs is on our website, all the fact sheets, all the performance data, all the educational stuff to learn about ETFs is on that website, and you can transact on ETFs through that website from small amounts. So you can do 300 Rand a month debit order and we'll take it, whereas if you go to Klukas Gray, they probably don't look at you unless you bring them a couple of million Rand. So we'll do from small investments, and hopefully we'll get some big investments as well. So it's purely a website-based business, and there's quite a lot of momentum. I think it's a private business. I don't tell people, but I think people would be very surprised if they knew how many clients I've got.
Okay, well that's a good thing to know. And of course it is shaking up the industry when it comes to costs. That's what everyone is saying right now. But we have to take a quick break, and before we do that, you are on the investment wisdom part of the show. So one piece of advice that you'd pass on to people watching the show today through your many years of experience in the industry.
Yes, I think number one, be innovative. Because in the financial services industry, we're all selling the same stuff. We're all selling people the same shares. We're saying buy a Bidvest or buy Saving Breweries. So to persuade people to do that, you have to be innovative. The other thing is, be compliant, be honest, and treat your clients fairly. Because your clients are what support the business. And I've learned that over the years. And nowadays I'm purely client-centric focused, and something I learned from Max Borkum. And funny enough, Sidney Frankel, who ran Frankel Pollock, was one of the great client people I've ever met. Sidney would sell ice to Eskimos because he just focused on the client base.
Remember who pays your salary. Thank you so much.